The state of Hawaii has a tax on the sale of real property called HARPTA. What is it? We'll talk about all that coming up next. Hey, what's going on, friends? Dylan Onaka here, and this week we're going to talk about HARPTA. And HARPTA is a tax on the sale of real property which is modeled after FIRPTA, which is a federal tax on the sale of real property to non-US residents. And so Hawaii thought that was a good idea, and they made their own version of it. FIRPTA, the federal withholding, is 15%. HARPTA, the state withholding, is 7.25%. We're not unique. There are 15 other states that do something similar, and it generates a lot of revenue for the state of Hawaii. So in the state of Hawaii, about 700 properties a year, give or take, are subject to this withholding, and it generates about $180 million a year for the state. So it's a significant amount of income for the state, but it's something that a lot of times sellers get surprised by because they're not informed of this by their realtor prior to putting their house on the market. And as it comes to closing, they get a settlement statement and they got this huge withholding for HARPTA that they didn't know was coming, and it can be a significant amount, right? 7.25% is a lot depending on the sales price of your home. So it's something that you definitely want to be aware of and prepared for, and make sure that you consult with a CPA or tax attorney on your specific situation so you understand the implications and what your liability is going to be, because don't trust your realtor, don't trust escrow, don't trust the guy at the tax office. You want to get somebody to really look deeply into this and make sure that you are paying what you owe, but not too much. And so the interesting thing about HARPTA is it is a withholding that is the buyer is responsible to pay. So that doesn't really make sense, right? Because the seller is paying, the seller is getting the proceeds. But the way that the law is written, it puts the responsibility on the buyer, because we know what sellers do. They get their money and they leave town, and there's no way they're going to come back and pay those taxes, right? So the way the state wrote the law is the buyer is responsible. So the way that that's solved in a real estate transaction is our contracts, our real estate contracts, require that the money be withheld from the seller and then paid to the state on behalf of the buyer. And so it's a little bit complicated, but that's how the state got away with making sure that that tax gets paid, is they made it a buyer responsibility of property. And so all that can be resolved during escrow, and this is why you want to think about this early if you're thinking about putting your property on the market and you're not a Hawaii resident, because this is going to have an implication on the amount of money that you walk away with. But if you want to prepare for it and apply for an exemption, you want to start early, because it can take a little bit of time for the state to approve it. And so there's basically 3 exemptions. The first one being, if you are a resident of the state of Hawaii, you don't have to worry about it. You're exempt. You just got to file the paperwork and you won't have to pay HARPTA. The second one is if you're doing a 1031 exchange. That's a separate topic, but if you're doing a 1031 exchange, which is where you defer the profits on real property investments to the future, then you would be exempt from paying HARPTA. But you have to be doing a 1031 exchange in order to qualify for that. And the last one being that if the property is under $300,000 and the owner has lived in it for the last year, then you can also be exempt. The important thing to understand about the exemption on both sides of this transaction is that the buyer has to approve of it, right? Because the buyer is responsible to pay the tax. So I have been in transactions where the seller applies for the exemption, and I know they don't live here. They say they claim they do, but I know they don't for whatever reason. And you have to call that out, because your buyer, my buyer client, is going to be responsible to pay that tax if we approve of that HARPTA exemption, and that's actually not the case and the state finds out. So you got to be careful about this. You got to be informed about this. This is an intricacy of the sale of real property in Hawaii, but it has a huge effect. So if you have any questions, you can always reach out, but I will always defer to a CPA or tax attorney to look at your specific situation and give you professional advice, because we are not tax advisors. I can tell you the overall details and let you know that it's coming, but we're always going to ask you to consult with a professional to make sure that you're getting good advice on this. So as always, if you've got any questions, Dylan at Buy Big Island or in the comments below. Appreciate you guys watching. I'll see you guys next week. Aloha.